Good afternoon, everyone. 2017 was a great year for Bitcoin. 2018 was a disaster. But what about 2019? Well, today we'll answer that question with no punches pulled. And joining me today are Juan Villaverde, architect of the Wise Cryptocurrency Ratings and editor of the Wise Crypto Publications. Gavin Magor, director of Weiss Research, the research division at Weiss, and Bob C., a longtime subscriber who will be asking your questions, as well as a couple of his own. Juan, let me start with you.
Sure.
You're a mathematician, an econometrician. Your unique skill is building predictive computer models. In other words, models that can help us predict the future. And for cryptocurrencies, you've built, or you've helped us build, not just one of those computer models, but two. Please tell us about that to give us some idea of how you do this.
Sure. So first we have our ratings model. And what that does is it helps us identify the cryptocurrencies with the most upside potential. And these are the coins that we want to buy. And number two, I developed also a timing model, a cycles model that tells us when to get in, when is the best time to buy these cryptocurrencies that are most likely to go up.
So in other words, the first model tells us what to buy. The second model tells us when to buy. Is that right?
Correct. Exactly.
So your forecast for the future of Bitcoin and the future of cryptocurrencies are not based on guesswork. They're based on hard facts. They're based on crunching massive amounts of data.
Right. So these doesn't make the forecast right, but they're certainly not our guesses. These are based on mathematical formulas and algorithms. This is what drives our investment decisions.
It doesn't guarantee that you'll be right, but it improves the probability of being right.
That's correct.
That's why we were right about Bitcoin. It's why you've been very cautious about investing in crypto all year long, which was one heck of a good call, by the way. Congratulations.
Well, you can thank my timing model for that, because it wasn't me. It was my model said this market is not yet bullish. It's not yet the right time.
Yeah. Now, we can talk more about the models later if we have time. Right now, can we cut to the chase and go straight to the forecasts? Because I think it's important because, previously, Bitcoin had suffered through how many? 4 bear markets of 70% declines or more. And each time, the so-called experts wrote its obituary. Each time, Bitcoin surprised them and rose from the dead. And each time it launched into this massive bull market with average rise of 6,300%. So if you bought those bottoms, on average, you would have seen gains of 63 to 1. Now, in 2018, Bitcoin has done it again. Again, it's down by more than 70%. And again, some folks are saying that Bitcoin is dead. So the question is, this is my question for you, Juan, are they finally right? Or will Bitcoin rise up again in 2019?
They're absolutely wrong again. They say that every time Bitcoin is down, for some reason, people come out of the workbook and say, oh, cryptocurrency is dead. It's just a passing fad. But no, it will rise again, just like it did before. The fundamentals are getting stronger every day. We've seen a lot of improvement on the adoption side of the industry throughout 2018. And that almost guarantees that we will see a bull market again, and Bitcoin will make new all-time highs again.
You mean even as... Go ahead.
I was going to say, Martin, I don't doubt Juan's wisdom of his forecasting, but let's not forget that with every huge opportunity for profits, there's also the danger of losses.
Agreed. And with that in mind, I think this is a good time to share your screen, Juan, because that will give us an idea of how your timing model works and how high maybe Bitcoin can go up next time.
Sure.
Could you do that and show us some charts?
Sure. So I think the closest analog for what we're seeing today is the bear market of 2014 and the consolidation of 2015.
Mm-hmm.
So as you can see here in 2014, let me start with that. I don't know if you can see on the screen here, but Bitcoin did nothing but go down. This caused a lot of people to write it off as a passing fad or something that would never recover again.
Mm-hmm.
In January of 2015, we saw Bitcoin finally fall about 90% from its high in 2014. So the high in 2014 was $1,000, 1,150 or something like that. It went all the way down to 150 before it reached the low. So that caused a lot of people to write it off.
That's not 90%. That's about 80% and change, 85%.
Yeah, well, it really depends on the exchange you're looking at. In some cases, it went down 90%. In some cases, it went down 86, 87.
Okay.
At any rate, a lot of people wrote it off back then, and they thought it would never recover. And for a while, it just consolidated sideways. It doesn't say it's going to start right away. But once you cross the green line, the market turns bullish. Once the market turns bullish, you know to expect a major bull run. And that's indeed what happened. Starting in late 2015, going all the way through December of 2017, we had one of the biggest bull markets in crypto's history.
But it's still here under $500 per Bitcoin. So could you show us how?
Yeah, just keep going forward and you'll see what happens.
Okay.
So it bottoms out at 200, as you can see, and then it just keeps going. And there were some consolidation phases, right? But throughout this entire period, our model is saying, no, the bull market is still on. So we're still bullish, still bullish.
And now it's finally getting into the 1000s. Okay.
Yeah.
And now
this is early 2017. As you can see, it keeps going. It keeps going. Let me show you when the model turned bearish, because I think it nailed the high also. So throughout this entire period, our model is saying, buy Bitcoin, hold on to it. It's going to keep going up. Our model turns bearish here.
Wow, on 20,000.
Yeah. After 20K, it falls. Our model got us out of this market December 20th. So right after the high. This is when our model say, okay, the bull market is over at this point. We're probably gonna a consolidation and bear market will.
And that's one of the reasons why we gave Bitcoin a C+, and it's one of the reasons why it was definitely not the time to buy.
And that's why I was so cautious, because my model had turned bearish and then neutral and then bearish again in 2018. It never went back to being bullish.
So the most recent bull market ran for what, about 2.5 to 3 years, from early 2015 to the end of 2017, right?
Yeah, correct.
Bitcoin rose from about $200 to nearly $20,000. Hey, that's not the 63 to 1 gain that I told you about on average. That's 100 to 1 gain. But the question is, those are not the kinds of gains you see in the Bitcoin in the next bull market, are they?
Not this time, because one thing that we didn't mention is that there have been several bull markets in Bitcoin in the past. Bitcoin is 10 years old, and every time it goes up a little less. So with every new bull market, Bitcoin seems to go up less and less. And this is simply a result of increasing liquidity, increasing adoption, which makes prices more stable. So we're expecting that in the next bull market going forward. We're expecting prices to be more stable. We don't think it's going to go up 100 to 1, but it could go up, say, 20 or 30 to 1. It certainly could.
That wouldn't be bad at all.
Not at all. No.
Now, so what is the future for Bitcoin in terms of how it'll be used?
So what we're seeing in terms of adoption in Bitcoin is as a store of value. It was initially conceived to be a peer-to-peer electronic cash system, but that's not how people are using it. People are using it to store value. We see that going forward. We also see that helping its price go up also, because if more people start using it to store value, price has to naturally rise, because supply is very limited in the Bitcoin network. There's only 21 million Bitcoin. There will never be one more.
Let's say that's forecast number one, right? And you're saying that Bitcoin's usage will be more and more for a store of value.
Yeah.
And that store of value is going to cost virtually nothing to store and virtually nothing to transport.
Correct, which is why it's such a great store of value. It's also very safe. It's very it's very difficult to lose that store of value.
Talk about store of value makes me think about gold.
Yeah.
Yeah.
You know, and Bitcoin, like gold, doesn't depend on any third party or any government for its value. And Bitcoin, unlike gold, is virtually unconfiscatable. So that makes me wonder if Bitcoin is going to be the new kind of digital gold going forward.
Well, a lot of people are calling it gold 2.0 or digital gold already. So absolutely, it has all the characteristics of a very safe and reliable way to store value. And we see that becoming more and more its niche use case going forward.
And less so the original use case that it was intended for, which is transferring money back and forth and used as kind of an exchange medium.
Yeah. But sadly, yes, we're not really seeing that, which is not really negative, but we're not really seeing that. We're seeing that Wall Street is getting involved now, and they see it as a commodity to store value. Just like gold, it really is just like gold, but digital.
So let me also summarize what you said about the next big bull market in Bitcoin. Forecast number 2. In 2019, Bitcoin will rise up again and head for new all-time highs, and it could give you gains of as much as 30 to 1. Not as much as last time, but still very, very good. So, which leads me to the next question. What about other cryptocurrencies, the so-called altcoins? Historically, they've risen even more than Bitcoin.
Exactly. So the altcoins typically are less well-known. They're typically less liquid. And as they rise from obscurity, they typically go out several orders of magnitude what Bitcoin goes up. So if Bitcoin goes up, say, 30 to 1, you can see a good altcoin go up 100 to 1, maybe even more. So that's why our model sometimes rotates into those altcoins, because it sees it as better investments.
Well, has this happened before? I mean, are you basing this on the past or just on conjecture about the future?
Every bull market in Bitcoin sees a select number of altcoins go up a lot more than Bitcoin. So yes, this is based on every bull market in crypto we've ever seen.
Yeah, but don't forget, Juan, they've also gone down at least 90% as well. They go down big time.
So now let me ask you this. If it's down 90%, or some of these are down 90%, is that a good thing or a bad thing for 2019 for investors?
Well, it depends. It's a good thing if you can select and pick the few projects that are actually getting any traction in the real world and are seeing increasing adoption, because those are likely to go right back up into all-time highs, rising above their all-time highs by several orders of magnitude. I'm talking maybe 20 or 30 times above their last all-time high. And if you consider that they went down 90%, that is a lot of upside. So if you can find the coins that are doing well, the coins that are really solid projects going forward that contribute value to the world, then these are fantastic investments. On the other hand, if you're talking about the ones that are just copycats or not really adding anything new, those are likely to go down even more.
Forecast number 3, select altcoins will rise from relative obscurity and could go up to as much as 20 times their previous all-time highs.
Correct.
Tell us how you see that panning out and what will drive those kinds of gains.
For instance, a lot of cryptocurrencies today are trying to solve the issue of distributed applications. This is a new type of internet application. These cryptocurrencies are trying to fuel a new kind of internet. There's a lot of competition in that space.
You mean like Ethereum? Like Ethereum, you mean?
Ethereum, yes.
Where
There's a lot of coins that are trying to be like Ethereum, but Ethereum has a lot of issues. However, the altcoins that successfully manage to solve Ethereum's issues are likely to go up a lot from where they are now. Some of them are not even out on the market yet. And these coins, if they succeed in creating this new type of internet, could be worth trillions of dollars in market cap one day. And I'm not exaggerating. This is a massive opportunity.
That's one use case, building a new kind of internet. What's the other important use case?
The other important use case is in finance. As most people know, Bitcoin was created to be a new kind of digital payment network. Now it has failed to become that, but others like Stellar or XRP are rising to the challenge, and they solve some of Bitcoin's issues. And we see them as becoming potentially global payment networks in the future, a new type of, a new way of transmitting value across the globe. And we're talking here about disrupting financial markets, the way we send payments to one another, remittances, wire transfers, this entire area of payments and how we send money back and forth with one another is going to be disrupted by some of these cryptocurrencies.
You mentioned XRP. That's Ripple's coin, right? The one that they manage and the one that they created, right?
Yeah.
And it's already, from what I hear, the second largest cryptocurrency in the world by market cap. Some people say that in the future, it will be number one, even surpassing Bitcoin. Could you give us your perspective on that?
Sure. A lot of enthusiasts think that XRP could one day overtake Bitcoin as the largest cryptocurrency in the world. It could certainly happen. I mean, what they're trying to do is disrupt SWIFT. SWIFT is this giant payments network that banks use to send money back and forth. If they manage to chip away at its market, if they manage to successfully compete against SWIFT and even replace it in some areas, you could definitely see Ripple becoming the number one cryptocurrency on the planet, but it's hard to say.
Juan, you told us about Stellar and Ripple, and you named those two cryptocurrencies for the kind that will disrupt the world of banking. But could you name also the ones that you see right now as having the best potential to create this new kind of internet?
If I had to name three that our model thinks are the best right now are EOS, Cardano, and Holochain. These are the cryptocurrencies that have been designed to run and host distributed applications, and they're pretty good at it, let's just say.
Okay. So now can I summarize and listen to actual forecasts for our viewers?
Sure.
Forecast number 4. One select group of cryptocurrencies like EOS, like Cardano, and like the new one, Holochain, will build a new kind of internet and virtual economies of the future, correct?
Yeah.
Okay, and forecast number 5, another select group of cryptocurrencies like Ripple's XRP and Stellar will disrupt and transform the world of banking and finance. Now let me ask you this question. Just recently, hackers have plundered $500 million in customer accounts at Marriott International. And and many other companies, they're shaking in their boots. They're desperate for the security of blockchain. So could you share with us how this will or will not impact the value of cryptocurrencies?
Sure. So these are two separate issues. I think a lot of people make the mistake of thinking that a company adopting blockchain, or more broadly speaking, distributed ledger technology, will somehow affect cryptocurrencies directly. But remember that these are different things. Blockchain can be used to secure databases of companies, but these databases will still be owned by these companies, and there's really no cryptocurrency attached to them. So there's really no direct way as of today to benefit directly from companies adopting distributed ledger technology or blockchain.
Unless you buy their shares.
Unless you buy their shares, correct.
Right. Okay. So forecast number 6, the technology underlying cryptocurrencies will be adopted by corporations and governments around the world to protect the security of their giant databases, but this will not drive up the price of cryptocurrencies themselves. Correct?
Correct.
Okay. Now, you've told us about the most promising cryptos, EOS, Cardano, Holochain, right? Very helpful. Stellar, Ripple's XRP. But what would be equally helpful, Juan, is to tell us which cryptos not to buy, which ones to avoid.
A lot of cryptocurrencies are probably going to disappear simply because they're not bringing anything new to the table. They're just doing what Bitcoin did, but they're not Bitcoin. And if you look at the top 10 by market cap, there's a number of cryptocurrencies that fit this description. I'm talking about Bitcoin Cash, Bitcoin SV, Litecoin. These cryptocurrencies that are top 10 by market cap today are probably going to slowly fade away just because they're trying to become a store of value like Bitcoin, but it's very hard to do that. And there's already Bitcoin for that. So there's really no use case for them. There's no need for them.
Okay, okay, sorry to cut you off. Forecast number 7, right? There are a number of Bitcoin lookalikes or Me Too coins that are currently in the top 10 by market cap, but will fade away. And those include, please?
Bitcoin Cash,
yes,
Bitcoin Satoshi's Vision or Bitcoin SV, and Litecoin.
Okay, next question. You mentioned Holochain, right? These are not blockchain. Could you tell us a little bit about other non-blockchain, truly brand new projects and what they mean?
Sure. So there's a lot of limitations to blockchain, especially when it comes to running distributed applications. We touched on that before.
Mm-hmm.
And there's two projects out there today. They're not really out there. They're still relatively obscure. They're not really that well known. One of them is Hedera Hashgraph. The other one is Holochain. These are not blockchains, but they are distributed ledgers, which is why we prefer the term DLT, or distributed ledger technology, over blockchain. And Hedera Hashgraph and Holochain do things differently, but we find these technologies are much better suited for becoming that new trust layer of the internet that we talked about, for hosting distributed applications. So we think their tokens are probably going to go up in value a lot more than some of their blockchain competitors, simply because the different architecture makes them superior technologies.
Okay, how about this forecast? Does this sum it up? Forecast number 8. Holochain and Hedera will burst onto the scene and rocket to the top 10 by market cap. Would you agree with that? Okay.
Absolutely.
These coins with the most revolutionary technology play a key role in our profit strategy. It's thanks to altcoins, not Bitcoin, that you could have turned $10,000 into more than $400,000 by using our profit strategy.
Well, I'm intrigued with this idea of turning 10,000 into 400,000, but I've lost money in investments before. That's why I've got so many gray whiskers. How does the strategy work, and how do you know it's going to work?
Well, nothing is guaranteed, but based on our model, which is very simple, we just rotate among the very top 5 among our the ones that have the very best rating in our list. We rate over 110 cryptocurrencies. So when you're picking the top 5 out of over 100, you're really looking at the cream of the crop. So if the rating falls, we rotate out. If the rating rises, we rotate in.
Okay, so how does that the performance of that rotational strategy, compare with other investments?
Well, if you could have used that strategy since 2017 through the end of September 2018, we calculate that you would have outperformed Bitcoin by 7.6 to 1. And Bitcoin did great during that period, even with a decline. If you compare it to the Dow, it's a bit apples to oranges, but if you compare it to the Dow, you could have done 122 times better. And even if you compare it to Netflix, which is the most profitable stock in the S&P 500, our strategy could have given you 22 times better results.
But Martin, that's all right there. But what about the people who
all
lost
right?
money?
You kidding? All right, it's more than all right. Give me a big.
Okay, a lot of people though, they have lost money with cryptos in 2018. So can you tell people about how you strategize helping protect against the losses?
Yes, and we can't protect against all losses. Losses are inevitable, and when the market is going down especially. But we have a few mechanisms that reduce the losses. We invest obviously only in the best coins. So all that garbage that Juan talked about, we avoid entirely. We make sure that we move. The strategy is to move out of the cryptocurrencies that are showing higher risk. And we also have the rule that says with every profitable trade, take 1/3 of the money off the table and set it aside.
Martin, the SEC has been warning about utility tokens, which I call ICOs.
Mm-hmm.
Do you buy those in your strategy?
No, we don't. We don't even rate them right now because most of those they're not really investments as far as we're concerned. And
Okay.
some people think they're cryptocurrencies. Some people think they're like shares in a company, but they're neither. They're more like green stamps they used to get at the gas station or American Advantage points. And nearly all of them have been a disaster for investors, just like we said they'd be. Any more questions, Bob, from readers or from yourself?
Yeah. I tried opening a cryptocurrency account with Coinbase, but I couldn't get in. I think a lot of people have had this experience. Why is it so hard? And is it really worth all the trouble?
That was primarily during the rage when there was a frenzy to get in. I know there was a kind of a long queue for them to process the opening of accounts, but that's not true today. Today, you can get in right away. As to the trouble, well, we have a simple guidebook. We have videos. We have a help desk that can walk you through that.
Okay. Earlier today, we talked quite a bit about Ripple and XRP and about its potential to disrupt and revolutionize finance. But to be a medium of transaction, doesn't the value have to stabilize? And if that's going to happen, why do I want to buy it if it's not going to go up?
Well, the value has to stabilize, but in order for it to be able to transfer the types of transaction volume that it should, the price has to go a lot higher. So yes, the price needs to stabilize, but at a much higher level from where it is today.
Makes sense.
So both are true.
I'm retired now. If, say, I have a nest egg of about $600,000 US, is this strategy something I should consider?
Not with your entire $600,000. No. If you're an average investor, you're not a speculator or a gambler, what I would do is cap your allocation to cryptocurrencies to about maybe 5% or so of your liquid assets. So in this case, that would be how much? About $30,000?
Yes.
Right. And then follow the strategy with that $30,000. For the rest of your money, the $570,000, keep it in safe investments that are conservative, that will give you a good yield, and that will, guarantee your retirement going forward.
Right, because this absolutely is speculative investing. This is not the money that you need to carry out your daily activities. This shouldn't be your gas money, your food money, and that sort of thing you're going to rely on. So absolutely recognize that you could lose it, and you really shouldn't be risking anything beyond what you can afford to lose.
How did you say it last time we spoke, Gavin? Don't put
Well, I always say don't invest Granny's pension in it.
On that note, thank you very much, gentlemen. If anyone wants to know more about our strategy that could have turned $10,000 into over $400,000 since the beginning of 2017, just click on the button below. Thank you very much.
Thank you.